Hi there, very good afternoon. Welcome back to ET. Now you're watching Market Fatafat with me, Kanishka Sarkar. This is a show where we'll discuss all the top buzzers in trade today, either on the back of news flow or on the back of technicals. But before that, a quick look at how the markets are shaping up at this hour. Well, it's a pretty good day coming in. More than 1% of gains, 269 points of gains is what we are seeing on the Nifty, trading at the 26,150 level. So holding on very strongly to that level. Sensex, more than 850 points of gains coming in on Sensex. 85,450 is the level for Sensex. On the other hand, we have Nifty Bank. Stellar moves over there as well. 627 points of an uptick is what we are seeing on the Bank Nifty. 59,446 is where the Bank Nifty is. Nifty gainers, JSW Steel, HDFC Life, Bajaj Finance, top Nifty gainers contributing to the upside of more than 1% gains that we are seeing on the Nifty. If you talk about losers, just three losers. Bharti Airtel trading with a cut of about 1.4%, whereas SBI Life and Asian Paints absolutely flat, but trading slightly on the negative side as far as the Nifty is concerned. NSE advanced decline ratio again in focus to 2,131 stocks on the advances, and yes, so it's tilted in the favor of advances very much. So strong moves coming for the market. We're holding very strong. But let's get started with the stocks then. And today we have Aditya Agarwala joining us, Head of Research and Investments at Invest for Edu Private Limited. Hi Aditya, very good afternoon. Thank you so much for joining us. And on the research side, today we have Rabinder joining us in the studio. So let's get started with all the stocks that are in focus today and buzzing on the back of news flow. First up on the list is Engineers India. Now this one is in focus today after announcing a major international breakthrough. And the company has signed an MOU with the Dangote Group for the second train expansion of the giant refinery, one of the world's largest greenfield refineries. This at a joint briefing to the media. Both of the companies confirmed the collaboration with the Dangote CEO, stating that the entire expansion project will be completed within a period of 3 years. Now, this marks a very significant global milestone for Engineers India, strengthening its footprint in high-value refinery engineering and boosting visibility in the international oil and gas space. So, very positive news flow for Engineers India, and the stock is also performing very smartly, 1.5% of gains on EIL, trading at that 198 level, very close to the 200 level. So, yes, that's about Engineers India. MOU with the Dangote Group. But moving on, Aditya, you've picked out 361 for. And the stock is also actually down about 2% if you look at it on a 1 month basis. So do you think we could see some more downside, or do you think a reversal is on the cards?
Hi, good afternoon. Thanks for the show. My sense is I don't see any downside in the stock. Rather, if anything, I think it's a good time to latch on to the stock, add in your portfolio, because this entire basket of capital markets companies are doing really well. Talk about AMCs, talk about exchanges, or talk about ancillary support companies. All of them are doing phenomenally well. And if you take a look at 361 stock has been into a good consolidation phase. It's on the verge of a breakout from a cup and handle pattern. And once it does so, my sense is stock is poised to test levels of 1250 to 1300 on the upside. So it's almost there about on the verge of a breakout from that resistance mark of 1159, 1175 on the upside. Plus, if I plot a few of the technical indicators supporting the bullish view on the stock. So overall, my sense is it's a good risk to reward trade at current levels with a support on the downside somewhere around 1100, and stock can easily test levels of 1300 on the upside. So one should clearly look at buying the stock in your portfolio and take some exposure to the capital marketplace, because this is one of the stocks which I think has potential on the upside.
All right, so you see potential on the upside for this one, but let's move on to the next counter, which is in focus on the back of a brokerage report, I believe. Ravinder, you've picked out PayTM for us, standing out very smartly today, holding up with gains of about 3%. Take us through what the note is about.
Well, as PayTM is in focus, where ICICI Security has come out with a note on PayTM, and they have maintained the buy rating and high target price to rupees 1450 as compared to earlier target price of rupees 1240. They highlighted, ICICI Security has said that the GMP growth outlook looks at strong at approximately 23% CAGR over FY25 to 28, despite earlier regulatory disruption, and net payment margin is improving, which is aided by the product mix. And this is the EBITDA inflection is underway and is estimated at 550 crore for FY26, 1390 crore for FY27 and 2150 crore for FY28. This is the international expansion optionally via partner-led and own modes operation models, and regulatory risks remain, especially for the loan distribution and the UPI link economies. So back of this positive note from the ICICI Security, PayTM is in focus and the stock is up more than 3%.
Alright, so that's PayTM up more than 3%. But moving on to the next counter that is in focus, that is Vikram Solar on the back of commissioning a massive 5 gigawatt solar module manufacturing facility plant in Tamil Nadu that takes its total capacity to 9.5 gigawatt. Now, the new Vallam facility is one of India's most automated, using robotics, advanced material handling systems, and inline quality checks to boost precision and reliability. Now, built on TOPCon technology and upgrade ready for HDFC technology, the plant can manufacture modules across M10, G12 and G12R formats. That's the word coming from the company. It will be catering to utility, commercial and industrial markets as well. And this expansion strengthens Vikram Solar's presence in Tamil Nadu and supports its broader push into battery manufacturing and future solar cell capacity. In fact, the management also commented. Chairman Gyanesh Chaudhary has said that the commissioning reflects the company's readiness for scale, speed and innovation in the coming decade. So yes, on the back of that commissioning, the stock is in focus. However, it has given up those morning gains and trading just about flat but with a positive bias. Next up on the list is Bajaj Auto. Aditya, you've picked this one out for us. What are the prospects looking like? What are the charts suggesting? Do we see more upside from here? 9100 is where the stock is holding.
I believe so, because within the two-wheeler space, if you take a look at the way Hero Moto has moved, or the TVS Motor has moved, or the recently listed Ather has moved, Bajaj Auto has been an underperformer. And if you see the last few trading sessions, how the stock has started moving higher, my sense is it's finally breaking out of that consolidation phase and is headed higher to levels of 9,500. That is the first target. If that is taken out, 10,000 could also be seen on the stock. On the downside, 9,000 is a good support area. So at current levels, it offers an excellent risk to reward. It's a low-hanging fruit and should do a catch-up play as well within the two-wheeler space, as Bajaj Auto has been an underperformer, like I mentioned. Plus, all the indicators are also supporting the bullish view out here. Overall, I think stock should be part of your portfolio, at least for the medium term in the two-wheeler space, and look for a target of 97 to 10,000 on the upside.
Alright, so very big targets, 9,700 to 10,000 for Bajaj Auto. It could play a catch-up, that's the word coming in. But Ravinder, let me come to you. The next stock on your list is TCS. Take us through what's the news flow here.
Well, yes, TCS is in focus, where company has extended its long-standing partnership with ALDI South, which is a leading international retailer, to manage the infrastructure and application services and improve stability and IT operation efficiency. This comprehensive multinational agreement further solidates TCS position as a ALDI South's trusted partners, which is supporting for the retailers' core values of simplicity, consistency and responsibility. And the partnership encompasses of ALDI South operation across Germany, Austria, Switzerland, etc. Then TCS will deploy its AI-enabled cloud operation solution and advanced digital services to stabilize, modernize and optimize the customer's infrastructure, enhance cyber resilience, accelerate automation and boost operational efficiency. So back of this partnership extended, TCS is in focus and the stock is up more than 1%.
That's right. So stock holding up well, nearly 1.6% of gains at the day's highest trading point. That's TCS for you. But moving on to the next counter, Aditya, you've picked out Uno Minda for us. Stock doing pretty well in trade today. In fact, in 2025 itself, it has given a return of about 25%. Do you expect this trend to continue in 2026 as well?
Oh, absolutely. In fact, this is one of the strongest auto ancillary plays if one is out there. And look at the price structure. It constantly makes higher highs, higher lows. And after the recent consolidation, stock, if anything, is poised to make new highs on the upside. So I would suggest one should clearly take an exposure in Uno Minda. Even at current levels, if you have missed out on an opportunity to go long in the recent correction, first day of move on back of very good volumes. RSI is trading above the 60 mark, which is entered into the bull territory. On the upside, I believe stock can easily test levels of 1400 to about 1450. On the downside, immediate supports are at 1270. So again, like I mentioned, risk to reward is also in favor. Plus, moving averages are all pointing northwards, which suggests that the stock is poised to test new highs in the coming times.
Alright, so that's Uno Minda. New highs could be coming ahead. That's the word coming in. But now let's move on and put the spotlight on NCC, which is yet again in focus. This is after securing a major contract worth 2,060 crore rupees from Assam's Public Works Department for the expansion and modernization of Guwahati Medical College and Hospital. Now, the project includes 42 months of work from demolition and design to full execution. This would be followed by 5 years of operation and maintenance as well, making it a long duration, high value win. Now, the order strengthens NCC's building and healthcare infrastructure portfolio and adds meaningfully to its project pipeline. So, on the back of this major order win, NCC is in focus and trading nearly 1% higher. So that's NCC for you. But now let's put the spotlight on another stock that is in focus, that is Lupin. And Aditya, you've picked out this one for us, Lupin in the spotlight. What is your expectation, given that the India-US trade deal could be coming soon? That's the word that we have been tracking as far as news is concerned. But on the technicals, what is the trend looking like? In 2025, it was largely muted. 13% of downtick is what we have seen year to date. But what's the trend going to be like?
So let's take a look at first the pharma space as an overall sector, how I believe this space is going to pan out. I think amidst all this volatility that we are witnessing in the markets, pharma could be one space, I believe, which could be the hiding place in case of volatility picking up, or maybe in the event of a correction. And for next 1 to 2 months, my sense is pharma is going to outperform the rest of the marketplace or the sectors. Now, within the pharma space, Lupin is one of those large cap companies which definitely stands out and is looking quite interesting. And like you mentioned, it hasn't done much for itself in last few months. In fact, last 1 year also, I don't see stock has done anything for itself. Now it's getting up for a big move, breaking out of that rounding bottom pattern. On the upside, I believe stock can easily test levels of 2250 to about 2300. Again, these are long, bigger targets from a longer term time frame. And on the downside, 2000 is a good support area. So with the stop loss just below 2000, look for a target of at least 2250 to about 2300 on the upside.
All right, so 2250 to 2300 on the upside. That's the target for Lupin. It could be a standout within the pharma space. That's the word coming in. But let's move on and talk about another counter that is in focus on the back of news flow probably. That is Dodla Dairy. Rabinder's holding out very strong, up nearly 4% in trade today. What's the news flow here?
Well, it's Dodla Dairy is in focus, where DAM Capital has come out with a note and they have initiated a coverage with buy rating with target price of rupees 1600. They say that the company is at a very important turning point. It is changing from a regional liquid milk company to a nationwide and fully integrated dairy business with a stronger and more efficient operation models. And over the past decade, company has built one of the most efficient supply chains in India's dairy sector, anchored by direct to farmers procurement, backward integration through Oragaf feed, and automation-led processing across 16 plants. So back of this positive note from the DAM Capital, Dodla Dairy is in focus and the stock is up approximately 4%.
All right, so that's Dodla Dairy for you, up nearly 4% on the back of that brokerage. But with that, time now to slip into a very short break. We'll discuss more buzzes on the other side of this break. Hi there, welcome back to ET Now. You're watching Market Fatafat with me, Kanishka Sarkar. It's a show where we're discussing all the top buzzers. But before we get back, here's a quick look at the infra space. Now, Motilal Oswal has come out with a note on building materials, expecting a recovery from the second half of this fiscal after seeing a slowdown in the recent past. My colleague Rabinder, he has done a comprehensive research and is here to take us through all of the details. Rabinder, over to you.
Well, as Motilal Oswal has come out with a note on the building material sector, and they have initiated a coverage on two stocks, Century Plyboards and Sera Sanitary Ware, and they have maintained their buy rating on the Kajaria Ceramics. For the sector, they say that the following a slowdown over the past 2 to 3 years, they expect the building product sector, including wood panel, tiles and bathware, to experience a recovery in the second half of FY26, and they expect revival will be underpinned by low unsold housing inventory and a spillover of the project launch in FY25 and 26. And they say that the industry is poised to benefit from the expansion of the real estate sector, increased government focus on infrastructure and housing, and growing premiumization and urbanization, and the implementation of BIS that prompts quality manufacturing. And for the stock specific, for Century Plyboard, they have initiated a coverage with buy rating with target price of rupees 958 on Century Plyboard. They believe that the company is well placed to capitalize on the demand peak in the housing sector, and they expect to clock a 15%, 32%, and 51% CAGR in revenue, EBITDA, and PAT over FY25 to 28. For Sera, they have initiated a coverage with neutral rating with target price rupees 5,842, and this is the company's solid balance sheet, increasing sales touch points refresh, and new SKUs and brand building efforts have helped company to consistently gain market share and they estimate a 9%, 10%, and 8% CAGR over FY25 to 28 with EBITDA margin. For Kajaria Ceramics, they have maintained their buy rating with target price of rupees 257. They say that the uptick in tile volumes is likely will be seen in the second half of FY26, and medium to long term outlook is quite robust for the ceramics. So back of all this positive note from the Motilal Oswal, all building material stock is in focus.
All right, so very positive note coming on the building material space. Kajaria Ceramics and others in the spotlight today. But let's move on and discuss some of the other top buzzers in trade. Aditya, you've picked out HDFC Life for us. How are the technicals looking like? If you look at the year-to-date period, solid returns of nearly 28%. Do you think this kind of upside is going to continue, or could there be some breather from here on?
If anything, it's building on to that gains that you're talking about for year-end date, and look at the consolidation that we had witnessed in last few weeks, and after that we're witnessing a good breakout in trade today from a downward sloping channel on good volumes as well. So I believe the move is going to get accentuated from current levels. Can see targets of 820 on the upside. On the downside, clear supports are between 750 to about 760 odd levels. So maybe keep a stop loss just below 760 and look for a target of 820 on the upside. And the key technical indicators that I follow are all in bullish territory and have broken out from their respective ranges as well, implying that the bullishness is likely to continue and build on in this stock. So definitely looks like there is room on the upside in HDFC Life.
All right, so room on the upside for HDFC Life. That's the word coming in on the technicals. But moving on, let's put the spotlight on Zydus Life Sciences as well, which is in focus after receiving a US FDA final approval for one of its drugs that is extended release of tablets in 3 strengths, that is 120, 180 and 240 mg. Now, this drug is used to beat high blood pressure. It will be manufactured at the company's Baddi facility. The product sees about $24.5 million in annual US sales that further boosts Zydus' US pipeline, where it now holds about 428 final ANDA approvals. So yes, on the back of this approval for a drug that will treat blood pressure and heart conditions, Zydus Life Sciences is in focus, trading well 1.5% higher at that 941 level. So yes, that's Zydus Life Sciences for you. But next up, let's put the spotlight on Siemens. Aditya, this is the one that you've picked out for us from the capital goods space. Take us through the technicals. What are the charts indicating for this one?
It's been very strong going for the stock, especially from the start of today's trading session, and a few days back also we witnessed a strong move in Siemens, and both the moves are backed by extremely healthy volumes as well. So this, if anything, this tells me that this up move that we're witnessing in trade today and which we had witnessed past few days prior is likely to get serious from current levels and can test levels of 3600 on the upside. Once 3600 is taken out, maybe 3800 is also something that I'm liking. Within the capital goods space, this is one stock which is showing enormous strength, and it's on the verge of a breakout from a cup and handle pattern again. So this is looking very strong on the charts, and one should look at building onto the long position. If you missed out, you can add at current levels with a stop loss at 3250 on the downside and look for a target of 3600, 3700 on the upside. Hold it for at least a couple of weeks and you will see decent upside in the stock.
All right, so that's Siemens India, more upside likely for the stock. But let's move on and put the spotlight on KEC Tech now. Ravinder, you've picked out this one. Believe the management is very optimistic about the third quarter revenues.
Well, yes, KEC Tech is in focus, where the management of the KEC Tech has met with several analysts, and they have highlighted some pointers where they say that the Q3 FY26 revenue likely to exceed 1300 crore, taking FY26 total revenue guidance of rupees 4100 crore as compared to FY25 revenue of rupees 2722 crore. The management believe that the EMS will be growth will be driven by industrial, auto, aerospace and expect expected recovery in the railway segment, and smart meter segment is expected to contribute of 800 to 1000 crore revenue in FY26, and Kavach railway safety system expected to contribute a revenue of 300 to 400 crore in FY26, and management is confident that EMS growth in medium term will be 30 to 35%. For PCB facility, they say that the PCB manufacturing facility commercial production is expected from FY27, and EBITDA margin expected from the PCB is more than 30%, and they expect 400 to 500 crore capex in FY26. So back of this, Keynes Technology is in focus, though the stock has erased all the morning gains, but stock is still trading in green.
That's right. So, Keynes Tech in focus on the back of that positive management commentary. But Aditya, coming to you next, you've picked out Max Financial for us. Trading at the day's highest point right now. Where do you see the stock headed from here? 1730 is the current level.
I believe stock can test 1800 instantly, maybe in a couple of trading sessions, days of trading session, it can test levels of 1800. And beyond 1800, 1850 is also something which is very much possible. Like you mentioned, trading at day highs, a very strong looking chart, continues to make higher highs, higher lows, and RSI has moved beyond the level of 60, and MACD is also broken off from its trigger line. So everything is going very good for the stock, and my sense is MFSL is going to see higher levels with a stop loss at 1700 on the downside. One can initiate a fresh long for a target of 1800 and 1850 on the upside.
Alright, so you could look at targets of 1800 and 1850 on the upside. That's the word coming on Max Financial. Well, that was the last stock of the day. Thank you, Aditya and Ravinder, for joining us today and taking us through all of the stocks that are buzzing in trade today. Well, with that, we're completely timed out on this edition of Market Fatafat. I'll take your leave, but don't go anywhere. Closing trades coming up next.